National income accounting. Let's quickly revise basic concepts of macroeconomics. First, domestic territory. It refers to the geographical boundaries of a country where economic activities take place. It includes land area, airspace, territorial waters, and embassies abroad. Example: an Indian embassy in USA is considered part of India's domestic territory. Second, normal resident. It is a person who lives in a country for more than 1 year and has economic interest there. For example, a student living in India for many years is a normal resident. But a tourist coming for 2 months is not a normal resident. Third, citizenship. Citizenship means the legal nationality of a person. For example, an Indian citizen living in Canada is still an Indian citizen. Fourth, residency. Residency is based on place of living and economic interest, not nationality. For example, a Japanese person living in India for 2 years is a resident of India. So, citizenship is equal to legal status, and residency is equal to economic status. Fifth, meaning of factor income. It is the income earned by factors of production for providing factor services. It includes wages, rent, interest, and profit. For example, salary earned by a teacher is a factor income. Sixth, meaning of transfer income. It is the income received without providing any productive service. For example, pension, scholarship, gifts, government allowance. Transfer income is not a part of production. So, factor income is earned by work, and transfer income is received freely. Seventh, meaning of final goods. It refers to goods that are ready for consumption and not used for further production. For example, bread bought by consumers and mobile phone purchased for personal use. Final goods are included in the national income. Eighth, meaning of intermediate goods. It refers to goods used as raw materials for producing other goods. For example, flour used to make bread, and cotton used to make clothes. Remember, intermediate goods are not counted separately to avoid double counting. Ninth, meaning of consumption goods. It refers to goods used for direct satisfaction of wants. These goods are purchased by households. For example, food, clothes, toothpaste. 10th, meaning of capital goods. It refers to goods used for further production, not for direct consumption. They help in producing other goods. For example, machines, tools, factory. 11th, meaning of gross investment. It refers to the total investment made during a year, including depreciation. The formula for gross investment is net investment plus depreciation. For example, a firm buys new machines worth rupees 10 lakhs. Here, the gross investment is rupees 10 lakhs. 12. Meaning of net investment. It refers to investment after deducting depreciation. The formula for net investment is gross investment minus depreciation. For example, if your gross investment is rupees 10 lakhs and depreciation is rupees 2 lakhs, then the net investment is rupees 8 lakhs. 13th, meaning of depreciation. Depreciation refers to the wear and tear or loss in value of fixed assets over time. It is also called consumption of fixed capital. Example: a machine becomes old and less efficient every year. This is a sign of depreciation. 14th, meaning of net indirect tax. It is the tax levied on the consumption of goods and services, like GST, excise duty, sales tax. Subsidies are financial help given by government. So, the formula for net indirect tax is indirect tax minus subsidies. For example, suppose GST collected is rupees 500 crores and subsidy is rupees 100 crores. Then, net indirect tax will be rupees 400 crores. 15th, meaning of factor cost. It refers to the value of goods and services measured by the cost of factors of production. It includes only factor payments like wages, rent, interest, and profit. Remember, factor cost does not include taxes. 16th, meaning of market price. It refers to the price paid by buyers in the market. It includes factor cost and net indirect taxes. So, the formula for market price is factor cost plus net indirect tax. For example, if a product price includes GST, it is market price. Here, the product price of chocolate is rupees 10. GST is rupees 5, so market price is rupees 15. 17th, meaning of net factor income from abroad. NFIA. It is the difference between factor income earned from abroad and factor income paid to foreigners. So, the formula for NFIA is income earned by residents abroad minus income earned by foreigners in India. For example, suppose Indian workers abroad earn rupees 200 crores and foreign workers in India earn rupees 150 crores. So, NFIA will be rupees 50 crores. So students, today we revised domestic territory, normal resident versus citizenship, factor income versus transfer income, final versus intermediate goods, consumption versus capital goods, gross and net investment, depreciation, net indirect tax, factor cost versus market price, net factor income from abroad. Like, share and subscribe for more revision videos. Happy learning!